this is John Kvale, and this is our August financial planning and capital market review. And there was an update. Again, I think I figured out why this is sometimes tricky to do. It's multiple softwares. It's 4 different softwares that I run in order to do these videos, because you have an audio, a screen capture, and then a video as well. So, but it looks like it's worked first time. And back to our August, it's kind of a snazzy picture that Jim and I created. So I wanted to go over our August 2025 capital market and financial planning review. And we do this in a video, audio, podcast format. Those of you that follow my work a lot, you know I'm trying to go a little bit slower. Sometimes I do, sometimes I don't, depending on what I have to talk about. But if you're driving down the road and you're listening to this, we thank you for that. But keep your hands on the wheel and be safe. All right, let's get to this. So, pulling the curtains behind the creation of this, what I do is I pull up the copy of the prior month and I duplicate it and then go and clear everything. Well, sometimes, like this month, there was no need to clear at least this first item. I've talked to several people, or multiple people, and talked about it in the newsletter, which should have landed in your mailbox. The majority of, and by the way, those of you that are in listen-only mode, I'm going to the financial planning area. It's going to call it tips, but it's going to have it loaded with a couple extra things here. It's with regard to the new tax laws that were passed on July 4th. There's a lot embedded in there, and there's not so much. What's not so much is the vast majority of the changes are just keeping a lot of laws that we're going to sunset at the end of this year. So a lot of us may not see any changes in our tax returns, but there are some pockets in there that are worth talking about, and I'm going to reiterate these. Talked about them on the newsletter, and I'm updating a lot of this. The first is the SALT, the state and local tax. So the key there is to watch the 500 to 600K income level, because it's a cliff phase out. And we're going to talk about maybe some planning strategies as we get our arms around making sure that we understand this correct. The second point that I'm going to that's highlighted here in a line item format is a broader 529 use. So we'll be able to distribute more for K through 12, and there's going to be broader usages of the 529. I'm going to do a post on just what are the trip ups on the 529, because I find myself reiterating those frequently, and there are some trip ups that can cause some problems. TikTok, September 30th, 2025, the EV credits stop, so you have to have your vehicle purchased before then in order to get your EV credit. Okay, the beneficiary IRA and RMD was not clarified in the Bigger Better bill. So what we're using is we've got a IRS law guide that we're going to use in those complicated situations, and we're going to document that and keep it in our files as we do those. Trump accounts, for those of you that maybe have missed it, there's a $1,000, if a newborn is born this year, you get a $1,000 Trump credit from, it's called a Trump account. You get a $1,000 credit, actually $1,000 deposited into an account. That's what we know. We don't know where that account is. We think it may be a Schwab or Fidelity or something like that, but it also may be a government account. So I mentioned a couple of times that this is when you go in and buy the car, set up the software, really the person that you should be talking to is the person that's going to maintain that, the person that's going to help keep that software running or keep that car running. And this is legislation. The Trump accounts were created, and then the IRS has to figure out how they're going to enforce it and how they're going to tax it and watch it. And then all the various companies figure out how they're going to basically administrate it. The $6,000, it was originally called the Social Security free, I don't remember the nomenclature, but basically it's a $6,000, for those of us 65 and older, it's a $6,000 extra deduction, so it bumps our standard deductions up. And those of you that are in listen-only mode, you click on these will get bigger. These are the graphs that I've made small for room's sake. So, and those have phase outs as well. Not very many people are talking about that, but I had an interesting, I'm doing something kind of, again, in the spirit of kind of pulling the curtains back and letting everybody know what we look at on a regular basis. So Jerome Powell did from Jackson Hole, Friday before Jackson Hole. He did signal that he's going to lower rates. The rub on this is that the consumer price index, their target is 2%. We can talk about whether that's good or bad, whatever, but their target's 2%. That consumer price index, after declining for quite a few months, is on an upward path, and our researchers think that it's going to continue up probably over 3%. Okay, good and the bad news. Maybe we get a rate cut that may be stimulative, but we're probably not going to get very much. And in that very much more. In that stimulative vein here, global markets, and I say this in green light fashion. By the way, I'm doing this on Monday, the September 1st Labor Day holiday. Maybe that's why I can talk a little slower and everything worked. It's when I'm in a rush that everything has problems. But international markets, for various reasons, and this may make some good subject matter as well, but international markets, after lagging for years, are leading. This is something that Donald and I watch frequently, and this is just various indexes across the world. And the United States indexes are down here at the bottom, and the international indexes are at the top. Now, granted, they have this is only a year to date, and we look at these on a quarterly, rolling years, and it is a reason that we have some international diversification, even though it was a whipping boy for a while. Does this continue? I don't know. We shall see. Certainly, the international, on the margin, the international markets are at a better valuation, and that's a lot due to the subject. That's the market structure of the United States markets. More on that as well in the future. Okay, I'm up to 6 minutes. I was going to try and keep this short. It's going to be a little bit longer, but I've got great Wi-Fi. And we will talk to you at the end of September. The football season has started. The pools are starting to close. And it's kind of a season change. I always say I'm ready for each season. And in closing, I start my fall travel. So I'll be in and out of the office a little bit more. It's not like I travel every week, although I have been traveling frequently more. So you'll see more of that here. Welcome to the fall, everybody. And thank you if you've lasted this long, we appreciate it very much. And we'll talk soon. Take care. Bye-bye.